Thanks for joining us at Interactive Investor today, and I have Neal Mitra with me from AKJ Crypto, who provide services to high-end professional investors looking to get into crypto, as well as hedge funds, and a platform to facilitate that. So hi, Neal.
Hi, Gary.
Thanks for coming in today, and I'd like to kick off by asking about the crypto winter and how that has affected hedge funds and the position of high net worth individuals looking to enter the space, with many funds, I presume, down 70 to 80% perhaps in terms of tracking the bear market over the past few months, although that looks like it might be turning around a bit today.
It seems to be, at least to us, we feel that the market is stabilizing somewhat. The so-called crypto winter, it wasn't unexpected in the sense that anytime there's a new market opportunity, there's this irrational exuberance which oftentimes precedes the development of the market itself. And just as we saw for those of us old enough to have lived through the dot-com bubble and other trends like that, this has followed a similar path. So the winter phase was not unexpected, and it's probably, while painful, it's probably healthy for the market's long-term development. And as far as companies being able to manage through that, the companies that come out on the other side, they turn out to be much more well-developed and in terms of their business models, in terms of their growth strategies, and just better positioned for the long term. And we're finding that with the companies that we work with, and we'd like to think that we're also suited up for long-term growth as well. So it's a good time. I mean, again, we feel that the market's stabilized somewhat and has sort of retrenched itself for the long term.
The Bitcoin price hit 5,000 overnight and pulled back somewhat, but that's the first time it's touched 5,000 since November last year. So perhaps the bottom is in. Thinking about hedge funds and the 2 and 20 model, does that still apply in terms of 2% fees and 20% of profits, given that there's no profits? I mean, how does that work in terms of the people that are in the hedge funds that you service?
I mean, is it
the same? Is it the same as in crypto as it is in the mainstream?
Generally speaking, I mean, as in traditional hedge funds and traditional private equity, venture capital, there is sort of a standard sort of 2 and 20 model that varies. There are scenarios where I've seen 1.5 and 15, or 2.5 and 30. It kind of varies, but the general construct is largely similar, at least with most of the fund managers that we've worked with. So as a point of reference, our business is essentially a turnkey platform for crypto hedge fund managers to set up their.
I guess you mean you can just turn the key and everything is there. It's just done.
Where
the expression comes from.
That's where the expression comes from, and we try to make the reality as close to that as possible. So for an emerging fund manager, essentially what we're doing is all of the steps of the process that are not investment focused, not investment facing. So starting with the formation, the legal and regulatory structuring and oversight, the trading platform, the back office, the account management, all of those activities we put in place through the infrastructure that we provide to our fund managers. And so, to get to your question, we then get the feedback from the market in terms of how fund managers are setting themselves up. And for the most part, most of these fund managers come from the traditional fund world, where they either had run a traditional fund strategy or they were running funds at a larger firm or a larger investment bank. And so they're coming from this more traditional paradigm of how to structure these models. And so we've seen that, which is not to say that they might not vary going forward, a year, 2 years, 5 years down the road. But that's what we've seen to date.
Okay. I read, I think it was on CoinDesk, there was an article by someone who talking about the side pocket investments, which I was wondering, what on earth does that mean? And I think they were referring to crypto assets that are very illiquid and therefore quite difficult to value.
Right.
So do you provide those sorts of services to funds and high net worth individuals in terms of advice on where to go?
So we're not providing advice, but being a platform for our fund managers, For us, it becomes more of, do we provide that capability? And so, as you might expect, a number of the fund managers that come to us, that is an interest that they have. Whereas in their primary fund, they're trading in assets that are already on an exchange. Whereas some have a desire to have a separate vehicle for some of these more illiquid offerings. So sort of pre-trading, and so that's a capability that's there. How it gets structured will vary from situation to situation, but that's simply recognizing that the overall sort of crypto space is still fairly early, and so it's more likely to happen more often than not that fund managers will want to have some kind of a side pocket or a co-investment vehicle, again reflecting traditional funds.
Could you tell us a little bit about the AKJ coin? Have I got that right? Or the token that is used?
Token, right. So,
and that unlocks other utility inside the platform.
So there are a number of aspects to it. So overall, the way we sort of define our world is we have the AKJ Crypto ecosystem, and so that's comprised of the fund platform, the turnkey fund platform, and then there's the AKJ token, which essentially serves as the currency for the ecosystem. So funds that come in through the token, so an investor, for instance, will buy the token, and so the funds come in to the platform, and to a lesser extent, it provides some development capital for the platform itself, though the platform is largely complete at this point, and it's launched and it's live in the market. The bulk of the capital is used essentially as a capital allocation vehicle for the fund managers on the platform. So we have a fund of funds, a hedge fund of funds that we recently launched as well and manage. And again, the capital that comes in through token proceeds are used in large part for the managers on our platform, and that varies across size, stage, strategy, jurisdiction of the funds that reside on the platform. It is merit-based. It's strategy aligned with the big picture. But then back to the token holder, there are a number of attributes that ownership of the token provides. One is sort of indirect managed access into the larger crypto economy through indirect participation through all of the best-in-class fund managers on the platform, as well as a net revenue share of all transaction fees that are generated on the site as well. Because you'll recall, part of the services that we're providing to our fund managers is a trading platform, trading support. And so the token owners will get a share of proceeds that are generated off of fees. And then finally, there's the appreciation of the token itself, the capital appreciation. So there are a number of dimensions to which the token owner will benefit from, again, transaction fees, capital appreciation of the fund of funds as well, in terms of performance fees, management fees. So it's
very different to something like the JP Morgan coin that's recently being launched or is in development, which is just providing liquidity for its customers, as opposed to it's a stable coin, which will have a stable value pegged against something, and yours is not. It's
correct.
It's actually something that could potentially one day end up on the open market or not.
Yeah, that's part of our plans going forward, namely to list the coin or list the token at some point. And it's also a function of the development of the markets as well. So not only the launch and development of security token exchanges, but then also the maturation of that market as well, as opposed to just listing ourselves on one of the first ones and then hoping things work out. So that market needs to develop a bit further, but to your point, that is very much within our plans as well.
The role of institutional money has been much talked about in the sector as perhaps the place where we're going to see FOMO next, the fear of missing out, not so much in retail, but amongst the big institutions. Are you a player in that space?
Very much so. That's actually the space where we play more. So we're not really a retail offering, though having said that, a number of the constituents within our ecosystem are, it may include sophisticated investors, high net worth investors, so sort of quasi-institutions in many cases, at least in terms of their level of sophistication. But going forward, our offering is more institutional oriented in terms of the funds on our platform, many of the investors in the token, so from kind of both sides of the equation. And it really reflects sort of where the market is now. To your point, we're sort of beyond the retail cowboy days, the chaos, the scams that we read about, and the lack of any regulation whatsoever. I think we all generally understand that the market has matured quite a bit since then, and to the point where now, the so-called smart money in the room is recognizing that enough is developed in the space where we're not going to go back. It's just a matter of what role crypto plays in the larger economy going forward, and over what time frame that occurs. So you mentioned J.P. Morgan, whether it's Facebook. We're seeing a lot of sort of well-known household names starting to make their bets within crypto, and they're making different types of bets in different ways. But the point is that there's a general acknowledgement that that the space is quickly becoming sort of institution ready, and that's again where we see our place in it as well, in terms of providing sort of an institution grade opportunity both for investors as well as for fund managers coming onto the platform.
So your competitors wouldn't really be the likes of Grayscale or Gemini in the over-the-counter market?
So we wouldn't see them as competitors. Most of the other players within the crypto space, we view, not necessarily the ones you're talking about, but just more generally speaking, either they're complementary to what they're doing, there could be partnership opportunities, or maybe some are doing entirely different things. But we don't view anyone as really a direct competitor. Because we view our offering as quite unique in terms of just the structure of it, as well as how it's catering to different constituents kind of all at the same time, whether it's a fund manager or a token investor or a strategic technology partner of ours, and all the while using our token as the single currency of exchange, and just motivating and incentivizing different stakeholders in different ways. It's a structure, when taken on its whole, is not really like anything that we've seen, at least in the marketplace. And so, given that the crypto space as a whole is still relatively early and growing rapidly, what we're finding is that just the range of potential partners and potential allies far exceeds anyone who at this point would even remotely resemble a direct competitor to us.
Okay. A recent development, Coinbase is getting into the staking business, providing a service for institutions that want to get involved in proof of stake networks and paying an interest on the staking that takes place. And they're going to take a look at the custody arrangements for that and take the risk away from institutions to get involved in those networks, such as Tezos, I think, is the one they're going to be starting with. Would AKJ be able to get into that space also? Because it seems like it might be an area that's developing, and it's the sort of a new technology which might enable scaled networks to really start to take off.
It's a good question. Potentially down the road. So there are a number of avenues in which we could evolve in the years ahead. For us right now, we're really focused on trying to stick to our knitting, as it were, and really develop continued development of the crypto platform, which in our case, there's also a strategic reason for doing that, which is that we had spent the past several years developing, launching, and expanding a similar platform on the traditional side of the business. So providing this turnkey infrastructure for traditional hedge fund managers. And so there's a lot that we've learned from that experience, many aspects of that which translate over to crypto, as you can imagine, many aspects which don't. So there are certain components of our offering which required a bit of sort of a ground-up development. But we now have this, it's in the market. We're seeing very good, robust traction with our initial wave of funds that are at various stages of onboarding onto the platform. So for us, for the foreseeable future, we're going to stick with that and focus on building that out. And then what the future may offer beyond that, we'll see. Anybody's guess what the crypto space will look like a year from now, 3 years from now. So, it'll be exciting to see, though, for sure.
Appreciate you don't want to give away any secrets, but how many funds have come to you looking for your services?
So we don't go into the specifics of that, but what I will say is the interest in kind of the pace of customer traction has been it's been great, and it also sort of reinforces some of the points I was making earlier in terms of our view that the market really is ripe for institutions to start taking their bets and start to sort of jump in with both feet. We're certainly seeing that with professional fund managers who've now shifted to a crypto exclusive strategy. Again, many of these fund managers used to allocate in more of a traditional domain, and increasing numbers, they're sort of making the shift to crypto to see, because they're sort of recognizing the fact that the projected sort of pace of growth and development in this asset class kind of far exceeds any other options that they may have in their decision set. And so again, we're sort of seeing the end result of that in terms of interest to get onto the platform. So it's again, it's sort of replicating what we've seen on the traditional side and then some. So we have the benefit of having that past learning, so we can come with an offering that's that much more ready for our customers. But then crypto is sort of growing and expanding at a rate now that the traditional side wasn't necessarily doing a few years back. And so again, the rate of traction and customer acquisition has been quite exciting for us.
So your footprint, customer base, is that mostly North America and Europe, or are you in Asia as well?
So primarily in Europe right now. Asia is under the consideration, certainly, as well as North America. So I myself am based in New York, so I am leading the charge for our U.S. expansion efforts. So check back with me in a year, and then we'll see where we are. But that's very much part of our strategy as well. We have offices here in London, as we do elsewhere in Europe. So our coverage and interest is sort of pan-European, but we do have specific feet on the ground, as it were, here in London, and are that much more in a position to take advantage of the activity going on locally.
Okay. Neal, could you say something about the possible entry point? Is now a good time for people to be thinking about getting into crypto, and is the regulatory landscape improving to an extent that justifies such a positioning?
So there's the age-old question of timing the market. When is a good time? So it's always a tricky thing, though. Though generally speaking, I would say that I think now is a good time, because we were talking about sort of the downturn in the market over the course of last year, and whether we're at the bottom now or not, we're probably relatively close to it. Again, timing these things is tough, but our view is that now is probably a reasonable time, partly because of sort of the market trends, but then also because in parallel, the sophistication that we've seen amongst the players within crypto, the players in terms of technology, in terms of security, in terms of regulation, putting much more I guess protections and structure around the space. And regulation in particular is a key component that we look at. Our token is a security token. Our organization is under a regulated framework, and we all have individually, we all have experience running teams and running businesses from within a regulated scheme, and that's of utmost importance to us. Again, the market has sort of evolved to a point where I think we all understand that there is a need for regulation. It plays an important role in allowing a new market opportunity to grow, develop, and then sustain itself for the long term. And so that's important, and that's happening, and those steps continue to take place. A final point I'll make about sort of whether now is the right time or not. there's a phrase internally that we like to use, which is the notion of getting off zero. And what we mean by that is, is it now a time to get off of a zero allocation to crypto? And I would contend that one would be hard pressed at this point to argue against that. Again, too much has happened in the market, especially for a professional capital allocator of capital to sort of continue to hold fast to a decision of not having any allocation into the asset class. It becomes a increasingly difficult argument to sustain. And so it's not to say that overnight you allocate 20% of your portfolio into crypto, but it may be taking baby steps or dipping your toe in the water. But
2% of tens of trillions of dollars out there is quite a lot.
Right, and so
the size of crypto
right, yeah, right, exactly. And so our again, our view is that now it's tough to argue against dipping your toe in the water and starting to allocate some portion into crypto. So this getting off zero, whereas the market might not have been at that point a year ago, it's evolved to a point now where that really for us is sort of the becomes a theme to follow.
Thank you very much, Neal, for taking the time out to speak to Interactive Investor today.
Thank you, Gary.
That was Neal Mitra from AKJ Crypto, joining us today to talk about the hedge fund world and the high net worth individuals trying to get into crypto and the services that AKJ provides. Thank you, Neal.
Thank you. Yeah.
Cheers.
Very good.